In this video, I want to look into the advantages of equity funds, the advantages, the benefits of investing in equity funds. Number one is potential for high returns. There's that potential for a relatively higher level of returns compared to other funds. And equity funds offer the opportunity for significant capital appreciation over the long term, as equities have historically outperformed most other asset classes. Yeah. Based on historical data, it's discovered that equities tend to outperform all other asset classes. Number two is professional management. Professional management. These funds are managed by experienced fund managers, smart, experienced fund managers who conduct research, analyze the markets, and select stocks to optimize returns, while at the same time managing risk in the portfolio. So they have these professional managers that take care of their research and stock selection, as well as managing the entire portfolio. Number three is diversification. Diversification here, equity funds they invest in a wide variety of stocks across various sectors, across different industries, and also from different geographies. And so this particular action tends to significantly reduce the risk of an individual, of them investing in a single sector, or in a single stock. So the risk involved is relatively small, minimal, because of the level of diversification the funds adopt. Number four is liquidity. Liquidity actually is key when it comes to equity funds. You discover that equity funds are highly liquid, allowing investors to buy or sell units at the net asset value on the same trading day. Just key in your order gets executed, and your fund will be transferred to your bank accounts. So that liquidity is always there. Number five is ease of access. Is easily accessible, and investors can start investing in equity funds with relatively small amounts of money, making them accessible to individuals with varying level of capital. No matter how small your budget is, as long as you're willing to invest, then you could invest in an equity fund. If you lack the confidence or the skills, the know-how, or the knowledge of picking individual stocks, then you could, for a start, invest in an equity fund. Number six is variety of options. Variety of options. Equity funds come in various types. You have the growth funds, you have value funds, you have sector funds, you have index funds, allowing investors to choose based on their risk tolerance and investment objectives. What they have in common is that they all invest in the stock market, both the growth fund, the value fund, the index funds, all of them, the sector funds, all of them do what? They still invest in the stock market. So these are different classes of equity funds. Please subscribe to this channel and like this video, and you may drop a comment in the comment section if necessary. Number seven is cost efficiency. So pulling money from multiple investors, allows equity fund to achieve economies of scale, reducing transaction costs from individual investors. If you are to invest on an individual basis, your transaction cost could be higher than investing through an equity fund. It lowers your transaction cost. Number 8 is tax benefits. Tax benefits. In some jurisdictions, equity funds may offer tax advantages such as lower capital gains. There's that lower capital gain tax. The rates on at which your capital gain is taxed is lower. So it all depends on your location anyway. Depends on your jurisdiction, and some could even in some cases that tax exemption if you are holding for a very long time. You're holding a very long time. It might attract tax exemption. Number 9 is systemic systematic investment potential. Systematic investment potentials. You discover that many equity funds allow systematic investment plans, enabling investors to contribute fixed amounts regularly, which encourages disciplined investment and mitigate market timing. In this case, you may apply something like similar to dollar cost averages. Is a systematized way of investing. So you put in money regularly at regular interval, a certain amount of money at regular intervals. So this particular fund supports that kind of investing. Number 10 is inflation hedge. Over the long time, equity funds can help preserve and grow purchasing power. As the returns often outpace inflation. The returns often outpace inflation. And so these advantages make equity funds a popular choice for investors seeking growth and diversification while benefiting from professionally managed funds and ease of investing. Please, when you come across a video of this nature, don't just listen, endeavor to make sure that you put into practice what you've learned. So I told us earlier, with a little amount of money, you can key into this kind of investing. When it comes to investing, just start. When you start, you'll come to like it. And when you come to like it, you will then acquire more knowledge and become proficient as an investor. And that will lead you to a kind of financial freedom or independence in the near future. All right, don't just listen and go away, but listen and put to practice what you've learned. And that will be my joy. That's why I'm here, to be able to pass across this little knowledge to you that I feel will help you, as an individual.